Last time it took like 45. It took like it would. Hey, here we are. All right, let's make sure that everything here is working. Can you hear me?
Yeah.
Cool. What's up? Looks like there's a couple of people in here. How do I see who's there? I can't. I can see that. I can see. No, it's only one person. So we can edit out the beginning, can't we? Like this part.
Yeah. Yes.
Awesome. All right, 11:59. Yeah, it looks like there's 4 people here. I'm still trying to work out how I can see the people in the chat, but that doesn't matter. I'm sure I'll be able to see when the questions are asked. All right, let's do this. Let's get into it.
Sure.
All right. What is up, guys? We are back again, and I am attempting my second YouTube live. Rather than blabber on, I'm going to get straight into it. Looks like there's 6 people in the chat, and that is plenty enough for me to get started. So I'm going to share screen, and I think we will first start by just having a look at the 10K challenge update. Incredibly, we have gone from up. We were up 72%. So we took basically 10K. We took it from 10K to 17K. And now in the last week of trading, you can see that we are down to 8.8. We do still have 6,000 in cash, 6,000 Aussie in cash. So, there's a little bit of risk there, but the positions that we're still holding, I'm just going to zoom in to make sure everyone can see that. Again, this is in the aim of providing full transparency into this challenge, into the nuts and bolts of it all, into the warts of it all. You're going to see when we do well, you're going to see when we do poorly as well. So you notice that we had that big run up in those first 4 trading days, and then the market has been slowly selling off and our positions have been getting hurt. So we're down to 8.8. We've still got the Semler Jan 26 $45 call open. We're down 42% on that. We've got the MSTR. They were the short-term flyers based on the earnings call. They're not going too well. I'm probably not going to sell them. I'm just going to let them run to expiry. It's like, what do you do here? Do you take that 600, which is about 1,000 Aussie, and do you start again, or do you let it ride? Actually, you know what? If we get a bounce on Monday in the US, I'll probably just take profit on all of these if we get any kind of bounce, and I'll try and preserve as much capital as I have. This is a really interesting question, actually. While we're on this 10K challenge update, I got a question to my emails during the week, and someone had a bunch of options positions, short-term, medium-term. It's like Google, GDX, BitX. It was a whole bunch of different options positions, and pretty much like mine, they were down 50 to 70% on those positions. And they went through one by one, kind of asking me, what do I do here to kind of get out of this situation? How do I rescue myself from this situation? And the problem with options is when the market turns against you quickly, if you're trading short-term options, really like getting out is tough, right? And the tendency that we have is to kind of hang on to these positions when they're down. So I'm down 42%, I'm down 76%, I'm down 79% on these positions. It's like, well, I'm already down this amount. I might as well just hang on and see if it comes back. And most of the time that doesn't work out, right? Most of the time you would be better off just taking profit, salvaging whatever cash you can and starting again, right? That is the issue with trading options. That is the issue with momentum trading options, which is even more dangerous. On the other hand, if you've got 6 to 12 month leaps and you've just bought and they go against you, well, then you want to be asking yourself the question, should I be trading in and out of these convictions? It's like you had conviction to go long on this 6 month or this 12-month leap previously. The price is corrected, so it's gotten cheaper. You should really, if your conviction hasn't changed, I'd be wanting to buy more if the price gets cheaper, right? It's like markets, the share market and the options market, like financial markets are the only market in the world where when the price gets cheaper, sometimes people will run. So, that's a real conviction test. If you're buying long-term things and they get cheaper and you're not buying more, well, have you positioned too aggressively to begin with? Why aren't you positioned for more? Short-term, again, short-term, it's like you take what you can get and you reset. I think I will be looking for a bounce. Monday's trading in the US, I'll be looking for a bounce. And then I'll probably be exiting a lot of the positions that I don't have conviction in. I won't be touching any of my long-term positions. So, something like 85% of my portfolio is long-term positions made up of Bitcoin, my Metaplanet, Woodside, and STRK. And actually, that's a lie. I trimmed Woodside today. I took a small, I took a small amount of that off the table. And the only reason I did that is because I need some of that cash back in everyday life. And so I took a small bit off because I think, hey, if things do correct here, if we do get a further drawdown, 10, 20, 30% drawdown, well, I want to have a little bit of cash off. So, you have to be asking yourself, are you all in now? And if you're nervous and all in, then perhaps it's time to kind of be trimming some of your positions. But as far as all of our short-term positions go, I think I'll be looking for a bounce and then exiting out and then just seeing what the market does, right? So we're a little, and I was going through Bitcoin recently. So let's just quickly jump to that, and then I'll talk about what I think is happening and why the market is responding the way that it is. All right, so you can see here on the Bitcoin chart, we kind of lost a few days ago, back last week, we lost those green dots. Once we lose those green dots and then fall below the track line, you get some downside. That's when the downside kind of expediates. It is trying to put in a reversal on the daily, right? But we're still not out of trouble until we get back above that track line. If you look at the 6 hour, again, it's still just pushing up to the track line. And I think I've said in my tweets during the week, on the weekend, we really need to get above that 114,500 and stay above it. If you look at the 4 hour, again, it's just above it. If you look at the 1 hour, there's a little bit of momentum, right? But that needs to continue on, right? So we really need to stay above this 14.5 and push on. So let's see what happens, right? When the US market, so no one knows, like the honest truth is no one knows if we're going to correct further here or if we're going to break out higher. I can give you some potential and possible ranges of what I think is going to happen, but no one has a crystal ball. Anyone claims to know exactly point me in their direction and I'll start following them. Right. So there's still a lot of damage that's been done that needs to be recovered. And again, it's if you zoom in close, it's trying, but it's not yet doing it. So we kind of have to wait and see. We have to see what the market throws at us when the US opens, and we have to see what's going on. If we get any kind of bounce, like I said, I'll probably be looking to trim positions that I don't have conviction in, and then keeping my long-term, like I wouldn't be touching my Bitcoin, I wouldn't be touching my Metaplanet, things like that. If you don't have some cash to play with, you'd want to be holding a little bit of cash. And I'm seeing some questions. People are asking, how much cash are you holding currently? I'm higher than I've ever been at 25%. And it feels weird. Yeah, well, that's awesome. That's a great place to be. You know, feeling weird is good, especially when there's dips, right? You have money to buy. So, you know, you don't always have to be all in, especially if you're being aggressive with things like options. All right, so I'm just going to quickly go back and talk about what has happened recently and why the sell-off. I mean, I did put out a piece. Where is it? I did put out a piece back on around about July 20. This was on the weekly Saturday channel, basically saying, hey, Bank of England, Bank of Japan, central banks injecting silent liquidity as a sign that the system is getting close to stress. More liquidity and higher asset prices, namely Bitcoin and gold, coming. The only question is, do we get a mini crisis first? And I discussed all this in this podcast, right? And this is the kind of mini crisis that I was talking about in that podcast, right? You've got President Trump out there calling for interest rates to be cut. And if you look at the Main Street economy, and if you look at job growth and things like that, that is all slowing. And some really respected macro gurus that I'm following are basically saying, hey, we need an interest rate cut. But Powell, Jerome Powell, in a look to either protect his legacy or just because he's pissed off with all the comments that Trump keeps throwing at him, doesn't seem to want to cut interest rates at the moment. And what happened on Friday was this. We got this jobs report. Can you guys let me know in the comments if you can hear this? Can't hear it. All right, cool. So basically what happens is the jobs data comes out, and then months later it gets revised, right? And so the July jobs data, jobs created, came out and it was like 73,000, and then it got revised down to the June data was 147,000, and then got revised down to 14,000. So that's a really huge miss, and that's much poorer economic data than what the market was expecting, right? And really, if the Fed had that kind of information, that they, you know, you can make the argument that they should be cutting rates, but they're not. And now, so the market is basically telling them, hey, we're not happy. But the Fed is always late, right? The one thing that I've noticed is the Fed is always late. This is another one. I'm gonna put this one in the comments. So I'll put this here, and I think I can put it in the chat so you guys can check it out. And then I really want you guys to watch this one. So Darius Dale is someone I follow closely. His macro is awesome, and he also backs up his macro with a risk management process, right? At heart, this guy is a trader, and he's about managing your money in the short term as well as having long-term views. So follow what Darius is basically saying. But he's saying that the Fed just make a habit of being late. They're always behind the curve. It's like they want to be behind the curve. They want to be behind the eight ball. It's like they want the market to tank so then they can come in and have cover to do what they need to do, right? And they're always making mistakes because they're correcting for previous mistakes. This was Friday, so this is what you saw happen after the jobs data was released. Not good. You've got Eric Trump out there saying, buy the dips in Bitcoin and ETH. The last time he said buy the dips in Bitcoin and ETH, they sold off. So yeah, I don't know make what you will of that. And then you've got here Michael Howell, who's someone that I follow as well. And he's basically saying that liquidity is still set to rise throughout the end of the year. So my base case is still bullish, medium, long term, because I think this liquidity has to come. I think the rate cuts have to come. But in the short term, you want to be managing your risk. This here is really cool as well. If you want to see live futures pricing, I'll put this in the chat for you guys. This shows tick by tick. We looked at Bitcoin before. SUI was something that I added on the weekend. I think I added it around 350. I reckon I was probably too early in adding that because there's still so much damage that's been done to this. You see here now on the 1 hour chart, it's gotten above, but it's weakening now here. So, I think short term, I'm still really, really skeptical that we're going to recover straight away. I think it might be a bit of chop. You got to keep in mind as well, it's holidays in the US, like everyone goes on holidays in August. So people will most likely close out short-term positions, which is going to, the market is going to be very thin. And so it can get pushed in either direction pretty easily as well. You look at ETH again, kind of still hitting that resistance, not coming back. Let's see what happens here. Let's see if it comes back. And what we want to be watching on these 1 hour charts, does it come back, tag the track line, and then go again? That's what we need to see in the next trading session. I just wanted to quickly touch on this as well. For those who are out there starting to kind of trade alts and things like that, the way that you want to be looking at alts is, are they outperforming Bitcoin? You don't want to be in alts if they're not outperforming Bitcoin. So you can see this is Ethereum versus Bitcoin. And from December 21 to April 14th, Bitcoin outperformed ETH. So you did not want to be in alts from December 2021 until April 2025. That's like three or 4 years you didn't want to be in ETH, okay? Now we've got these green dots on the weekly, okay? And so it's no guarantee, but there's a potential that from here to the end of the cycle, ETH outperforms. But you want to be watching these charts of your alt versus Bitcoin, because if it's not outperforming Bitcoin, you don't want to be in it. I don't care how long ago you bought it. You just want to be out of any shit coins that aren't outperforming Bitcoin. The whole purpose of being in alts or treasury companies, etc., is to outperform Bitcoin. And if you can't, then there's no point being in it. On the daily, we still haven't got that strength back, but it's on that track line, right? So it's still looking okay. And then SUI, which is a recent one that I added. If you look at SUI versus Bitcoin, that's a decent chart, right? Since SUI's inception, it's been grinding higher versus Bitcoin. And so that's why I like SUI of all the alts. You can see here, though, it's still behind that. It's still below that track line, right? And so we want it to get back above before you be pushing any size into SUI versus Bitcoin. We can have a quick look at the overnight. So this is Bitcoin overnight. This is based on Friday's closing price. All the stuff that happened in the weekend, it's based on, it's 1.28% up based on Friday's closing price. BitX is up a little bit. So again, where there might be an opportunity to play a bit of a bounce on these, but I wouldn't be going into these in size because they don't look like they have that much strength. MicroStrategy up. Tesla is up in the overnight. S&P is up in the overnight. Gold is slightly down. Bonds are slightly down. TLT, Palantir is up, and Rocket Lab is only slightly up. Right, so that is what I'm watching. But let's have a look in the chat and let's answer some questions. All right, Dylan, what is your view on how MSTR's preferred bonds, how do they fund their dividends into perpetuity? He has to use the ATM or save cash from the IPOs. He can't sell Bitcoin. So if you go back and watch MSTR's earnings call, I think there's a couple of slides in there that talk about their debt requirements or the interest repayments and how much they need to cover it. I think in total, I can't remember the number, but I know in total the amount of yield that they have to cover at the moment, I think is under 1 billion, right? And they just raised 2.5 billion at the IPO of STRC. So at the moment, I still think that it's pretty easy for them to cover their yield. at the moment. What I think would happen though, in the event that MSTR trades at a discount to NAV. So say we go into a Bitcoin bear market and they have to cover the yield. I think what they will first do is they'll stop paying the dividends on STRD, Stride. They'll stop paying the dividends on that first. And then they might also sell some Stride to the market at a discount in order to cover dividends on all the other preferreds. They've said now that they won't sell MSTR. Said now that they won't sell MSTR at ATM under 2.5 MNAV. And I think they're trading at about a 1.5, 1.7 MNAV. I actually think that was a mistake. I think it was a mistake for Saylor to come out and say that, because it's almost like maybe they've set a cap now that will be hard for them to break at 2.5. It's like, yeah, I think it would have been better to kind of keep the market guessing a little bit with that, but let's see. But I think they will sell MSTR stock to cover dividends, even if it's under 2.5 MNAV. They'll do. Here's what they'll do with the preferreds. They'll stop issuing the yield on STRD because there's no penalty for doing that. They'll sell STRD wherever they can to buy back MSTR stock if MSTR trades at a discount to NAV. And I believe they'll do whatever they can to pay the yields on STRF and STRC. They are the two products, Saylor calls STRF his crown jewel. He wants that to have the best credit rating. And STRC, he wants it to kind of be like a stable short-term treasury. And so he's going to need to pay the yield on that. And so far, with the amount of debt that they've got on those, it's only something like $6 billion in preferred debt. They've got $74 billion in Bitcoin. They owe $6 billion in preferred debt. And so I think they'll be able to cover the yield pretty easily. Like the market is going to buy more preferreds when you've got that much cover. I think what they really want to do is retire the convertible bonds as soon as possible. They've got about $8 billion in convertible bond debt that they'll want to retire as soon as possible. So anyway, that's what I think. I think at the moment there's no issue with covering the yield. I think the stock is so highly traded that they'll be able to do that in a trading day. What sort of cash are you holding currently? I'm higher than I've ever been at 25%. It feels weird. I think I'm somewhere. Yeah, I think that's hot. Well, if you look at, I can tell you, if you look at my cash and my kind of bond so STRK, I kind of view it like a bond. It's not a bond. It's a preferred equity. But between my cash and my STRK position, I'm sitting at about 30% cash, 28 to 30% cash. So yeah, that's where I'm at. And and 25% of my portfolio before today was Woodside, which is pretty low vol. And I sold a small amount of that today as well to raise a little bit more cash, because I use that instead of having money in an offset, I put it in Woodside because it gets a yield. And I think, like I said in previous episodes, I think oil or energy companies are going to go up over time. That's my opinion. And so I want optionality for that. But I just took a small amount of profit because I kind of feel like it's hitting resistance. And if the rest of the market sells off, then it's going to sell off, and I'm going to be saying, why didn't I take a little bit of profit? So yeah, about 30%, maybe a little bit more now. Josh Mann's target is 444K. Yeah. Look, I rate Josh. Josh Mandela, I reckon, is a legend. He is one of those old school bond traders from, I think, Salomon Brothers from the day, and Michael Howe, the guy that I was showing you before, at Cross Border Capital is I think from the same company. So yeah, I rate Josh Mandela really, really highly. To be honest, I don't think Bitcoin is going to hit. Well, I don't think it's hitting it this year, that's for sure. So if the bull market ends this year, then it's not going to hit it. But we don't know. We don't know what's going to happen. We don't know how much equity is going to go into the system. We don't know how wild things are going to get. But I wouldn't be holding out for 444K, that's for sure. I'll be taking profit much before then. All right, we've got I think 23 people on the live. Does anyone else have any questions that they want to pop in the chat? I'm happy to ask, happy to answer any questions. I'm happy to take views as well. Did you invest in AIWP with Adam? No, I didn't. Maybe it's because I'm a control freak and I want to control all my own trades. But from what I hear, they are all going very, very well and banking some profit with that. So I haven't invested in it, but I hear it's going well. What's your take on trading with bots in altcoins? So I think that's another question related, similar to AIWP, right? Like I think it's a algorithmic or bot trading system. My opinion on automated trading, bots, AI trading, etc., is that when we're in a bull market, they print for you, and you can make a ton of money. Well, when I say a ton of money, you can outperform Bitcoin, you can outperform normal returns pretty well when we're in a bull market. The only consideration that I have with relation to them is that in a black swan, or like say the FTX event back in 2021 or whatever it was, 2022, when FTX went under, in that kind of black swan event, I think your stop losses and your liquidation levels can get taken out, because a lot of the reason that a lot of these bots make so much money is because they trade their positions, they scalp positions, but they trade on leverage, right? So 50x leverage or whatever. And in these black swan market events like FTX collapsing, your liquidation levels can get taken out and your whole account can get cleaned out in one day. And so that's my risk with them. So that's my concern with them. Yeah. So you've got to be careful. Make money while the hay shines. Well, make hay while the sun's shining, I guess. But don't overstay your welcome. Like, as the bull market gets bigger and bigger and bigger, if you put 10,000 into this algorithmic trading, and the bull market goes further and further, don't then go and put 500,000 in it just because it's going well. You want to be taking your money down potentially. When you are looking at options, leaps, how do you choose which option to buy? Are there any rules you follow to help? So yes, with relation to, so there's two different questions here. When I'm looking at leaps, I basically use leaps to augment a long-term view that I have. So I think, for example, ETH is going to outperform Bitcoin between now and the end of the cycle. So I bought leaps on Ether, so ETHA, which is the Ethereum ETF, and I bought leaps on Ether for April 2026. I basically saw that historically, based over the last 1 month, 2 months, 3 months, that those leaps were cheaper than what they'd previously been, because Ethereum had that big sell-off during the week. Now they got cheaper. A couple of days later, it continued selling off and they got cheaper, right? So you want to be adding to that. But I use leaps to augment a bet. So instead of going out there and buying $50,000 worth of Ethereum or $200,000 worth of Ethereum, you can buy $5,000, $10,000, $15,000 worth of leaps and get that same exposure. And so when I'm looking at leaps, I try and buy them when they're historically cheap to their 1, 3, and 3 month values, and I try and buy them on corrections. When I'm buying short-term calls, that's a little bit different. Short-term calls, they might not be cheap historically, but I'm riding the trend. So I'll give you an example of what I look at. So if we look at, actually, let's pull up Ether. So if we look at this track line in here and we look at Ethereum, you can see that the Ethereum ETF has had these big run-ups, then it corrects back to the track line, has a run-up, corrects back to the track line. So in a bull market, it's great to just play these corrections on short-term calls. So I'll look at the stock and how the stock's trading. Hits the track line, you play it for a bounce. Hits the track line, play it for a bounce. Hits the track line, play it for a bounce.